Best Buy just released its fiscal second quarter 2026 earnings, and they've surprised Wall Street with a strong beat on both revenue and profits.
Absolutely, a clear outperformance. Yet, despite these impressive numbers, their full-year forecast remains unchanged.
Right.
This creates a fascinating tension, prompting us to ask, what's truly driving this quarterly success and, what deeper factors are influencing their cautious forward guidance? That's really the mission of our deep dive today.
Okay, diving straight into those numbers, Best Buy really outdid themselves in Q2. Adjusted earnings per share, EPS, came in at $1.28, which handily beat the $1.21 expected by analysts, and revenue. That reached $9.44 billion, exceeding the $9.24 billion forecast.
Solid figures.
Yeah, solid figures by themselves, but the real eyebrow raiser, and for you, the key metric showing underlying strength, is comparable sales.
The sheer resilience here is truly remarkable. We've seen consumer electronics facing some serious headwinds, right? The company's annual sales declining for the past 3 years.
Right.
But Best Buy's Q2 results show very targeted areas of strength. It indicates a specific, successful strategy at play, not just, a general market tailwind.
That comparable sales figure, which is the growth from stores open for at least a year, giving us that true apples-to-apples comparison.
Right.
It actually grew by 1.6% across the entire enterprise.
Yeah.
Think about that for a moment. Best Buy's highest comparable sales growth in 3 years.
3 years, wow.
Completely defying analyst expectations for a slight decline. It suggests a fundamental shift, wouldn't you say?
It absolutely does. This isn't just a slight uptick. It feels like a significant inflection point after that period of declines.
Yeah.
It signals that certain segments of the consumer electronics market are robust, and Best Buy is effectively capturing that demand. And this growth wasn't solely domestic either, which adds another layer.
You're right. Good point. The growth wasn't confined to their home turf. Domestic comparable sales increased by 1.1%, which is good, but international comparable sales surged by a remarkable 7.6%.
7.6%.
Yeah. And even online sales in the U.S. rose by 5.1% year over year. Yeah. That accounts for nearly a third of total domestic revenue now.
Interesting. How do we interpret that disparity, though, between domestic and international, and the online strength holding up?
Well, that international surge, maybe stronger economic conditions overseas, or just really successful local strategies.
Could be either or both. It's definitely a diversification of growth. And that sustained online growth, even with physical stores performing well, it just underscores a mature omni-channel strategy, right? Customers are clearly comfortable using their digital channels for research, purchase, fulfillment, whatever. It shows the future isn't just online or in-store.
It's the blend.
Exactly. It's that seamless blend. And it frees up the physical stores to focus more on that experience, the service aspect, knowing the digital side is humming along.
So what does this all mean for you, this savvy consumer and tech enthusiast listening in? This beat wasn't random. It points directly to specific consumer behaviors and maybe some clever strategic plays by Best Buy.
Precisely. If we look at the broader landscape, it's clear Best Buy's CEO was, spot on, stating that their model really shines when there is innovation.
Right.
This quarter isn't just a beat, it's a testament to the power of new product cycles. It shows that despite, lingering economic pressures, consumers are still willing to open their wallets for genuinely new, compelling tech.
Which positions Best Buy as that crucial conduit, especially for complex stuff.
Absolutely, they bridge that gap.
Okay, let's zero in on the standout categories that powered this surge. Gaming was a huge win. They saw stronger than expected sales, primarily fueled by that highly anticipated Nintendo Switch 2 launch on June 5th.
That was everywhere.
It was. Best Buy capitalized on this with midnight openings, a smooth pre-order process. It showed customer enthusiasm isn't just online. People were lining up.
Yeah, like the old days. And it wasn't just the console itself, was it? It was peripherals, accessories, software.
The whole ecosystem.
Exactly, the ecosystem effect. It draws customers in for more than just the main event. And Best Buy's ability to execute on those big launches, logistics, the in-store buzz, that's a real differentiator.
Yeah.
Hard for pure online players to replicate.
Okay, so gaming was big. Computing was another strong performer. That's its 6th consecutive quarter of sales growth.
Each quarters, yeah.
They even reported the highest number of second quarter laptop unit sales in 15 years.
Wow, 15 years. That suggests a big replacement cycle kicking in, right? After all those pandemic-era purchases perhaps wearing out or just feeling dated.
Seems likely. And mobile phones, wearables, headphones also contributed positively.
But it's important to note not everything was up. Some categories faced headwinds like home theater, appliances,
Tablets, too.
right, tablets, partly because they were comparing against strong iPad sales from last year. It just highlights how selective consumers are right now.
Very selective.
People are still thoughtful about big-ticket items, especially with, say, slower housing turnover affecting appliance sales. But they are ready to spend on innovation or essential upgrades. It's kind of a bifurcated spending pattern.
The company noted their customers are resilient but deal-focused, thoughtful, but willing to spend when there's a clear need or that compelling new tech like the Switch 2 or maybe those new AI laptops.
Exactly.
So is Best Buy mostly riding these specific product waves, or is something more fundamental happening in how we're buying tech?
I think it's a bit of both. The product cycles provide the immediate spark, right?
Mm.
But Best Buy's role is facilitating those purchases by offering the right value proposition. And deal focus doesn't just mean rock bottom price. It's perceived value advice, financing, service bundles.
The whole package.
Right. It points to the importance of value, but also that undeniable pull of genuine innovation. And Best Buy, with its stores and staff, seems really well positioned to explain that tech, make it less abstract.
Okay, so despite this really impressive Q2 beat, Best Buy stuck by its full-year guidance. They'd actually cut that back in May.
Yeah, that's the cautious part.
It seems like a classic case of good numbers now, but let's be careful looking ahead. Is it purely the tariff uncertainty or maybe other concerns about consumer sentiment?
I think the primary driver for that prudence is indeed the uncertainty, particularly around potential tariffs later this year.
Okay.
Management sounds more confident. Sure, they're saying they're trending towards the higher end of their sales range, but maintaining the existing guidance. That's strategic. It manages expectations, provides a buffer.
Sensible, given the unpredictable landscape.
Very. And public companies often prefer this caution. Lowering guidance later, that hits investor confidence much harder.
So let's just recap that guidance for you listening. Full year, they're still expecting revenue of $41.1 billion to $41.9 billion. Comp sales projected between a 1% decline and a 1% increase.
Quite a range.
Yeah, reflects the uncertainty.
All right.
And adjusted EPS, still $6.15 to $6.30.
And the CFO also mentioned something interesting, that some shoppers might consciously hold off buying in Q3, specifically October.
Waiting for holiday deals.
Exactly, waiting for those Black Friday type deals. So that kind of shopper psychology also gets baked into their forecast. It's not just external economics.
Right. But let's dig into these tariffs a bit more. Rates have actually gone up since May. How are they managing that potential hit? Seems like a big risk for a retailer selling so many imported goods.
Well, their mitigation strategy here is, frankly, quite insightful. Best Buy directly imports only about 2% to 3% of what they sell.
Oh, that low.
Yeah, that small direct exposure is a massive advantage. For everything else, they're working really closely with their vendors
How so?
on everything from manufacturing flexibility, cost negotiations, country diversification, even adjusting the product assortment. These efforts mean the actual cost increases they absorb are much, much less than the overall effective rate of the tariffs.
Okay, so give me an example.
Well, they noted the blended effective tariff rate might average around 16%, but the actual impact on Best Buy's cost of goods is significantly softened because of all these strategies.
That's a crucial distinction. So that 16% blended rate doesn't directly translate to their bottom line because of this proactive vendor management. It acts like a buffer.
Precisely.
Does this set a standard for other retailers? Or is Best Buy kind of uniquely positioned here because of its scale and relationships?
It's likely a combination. Best Buy's deep, long-standing relationships with major brands definitely provide leverage many smaller retailers just don't have.
Right.
Brands often invest heavily in Best Buy stores, merchandising, even staffing sometimes. It's a mutually beneficial partnership. That allows for more flexible negotiations, a shared interest in mitigating shocks like tariffs.
So it offers a blueprint, maybe, but replicating it could be tough without that established ecosystem.
Exactly. Trust and collaboration built over years.
Okay, so beyond the quarterly numbers and tariffs, Best Buy is also making some, well, exceptionally bold strategic moves to drive growth for the rest of the year, really leaning into what a modern tech retailer can be.
They certainly are. It highlights their priorities. Strengthening omnichannel, yes, but also building entirely new profit streams and leveraging their unique in-store experience and expertise in really innovative ways. It's evolving the core model.
Let's talk about these new experiences. First, a groundbreaking Meta partnership. They're expanding AI glasses like the Ray-Ban and Oakley models to all stores and setting up immersive showcase areas in over 50 key locations. This isn't just selling a product. It's like demystifying the tech, right? For you, the listener, imagine actually experiencing AI tech before buying.
It's a very clever, forward-thinking move. Emerging tech like AI glasses, you need hands-on experience to grasp the value beyond a spec sheet. Best Buy is using its physical footprint to provide that critical touchpoint. They're basically becoming an innovation lab for the everyday consumer. It's not just about sales today, it's about building relevance and trust for the future.
In signaling to manufacturers, they're the place to launch cutting-edge stuff.
Exactly. They're betting on the future of personal tech and making sure they're at the forefront.
Okay, and then there's the IKEA mini showrooms pilot. This one feels really unexpected.
It is quite surprising, yeah.
Piloting 1,000 square foot mini showrooms with IKEA in 10 stores in Florida and Texas, featuring Best Buy appliances in IKEA kitchen and laundry settings.
And 2 will be IKEA pickup points, too.
Right. First time IKEA products will be available via another U.S. retailer. This seems like less about just selling more appliances and more about cross-pollinating customer bases, using space differently.
Absolutely. This IKEA partnership is bold. It challenges the traditional big box model. It signals a future where retailers blur lines, seek alliances to maximize physical space, and share customer traffic.
Interesting take.
It's less about what they're selling in isolation and more about how Best Buy is redefining the physical shopping experience, creating a destination, drawing in IKEA customers who might browse Best Buy and vice versa, driving foot traffic innovatively.
Really redefines retail partnerships. Okay, another big opportunity. Windows 10 end of life. Microsoft ends support in October.
A huge built-in upgrade cycle.
Right. Best Buy sees a significant needs-driven opportunity. They're offering 125 models of AI-capable laptops and desktops, and they have 16,000 specially trained experts ready.
Plus Geek Squad for the data transfers and setup.
Yeah, this is classic Best Buy capitalizing on a market event, isn't it?
It absolutely is, and it's where their service model really shines. It's not just selling a device, it's the full solution. Advice, migration.
Setup takes the headache away for people.
Exactly. Many consumers find upgrading daunting. Best Buy becomes the indispensable guide. It captures that reluctant upgrader market and drives high-margin service sales alongside the hardware.
And one more big launch.
Yeah.
The new Best Buy Marketplace, expanding online offerings by 6 times.
6 times, wow.
More tech, custom gaming gear, accessories, even new categories like licensed sporting goods. And crucially, you can return most marketplace items in-store.
That in-store return is key.
That's just like a direct response to Amazon, but with that physical advantage there.
That's a keen insight. It's definitely a move to broaden their digital shelf, compete more directly with marketplaces, but leveraging their physical stores for returns. That's the differentiator.
The click-and-mortar approach.
Precisely. Offers vast selection, plus the comfort of easy in-person returns. That's a big pain point online. It could capture more sales and position them as a really comprehensive tech destination.
These are really ambitious initiatives. What about behind the scenes? They're also streamlining operations, right?
A supply chain modernization program using data-driven sourcing for online orders, aiming for 100% implementation early next year.
And FedEx is now their primary national parcel carrier.
Which means faster deliveries, Sunday service, better tracking for the customer.
So these operational improvements, maybe not as flashy, but crucial.
Absolutely crucial. They enhance the customer experience, reduce costs, and support that whole complex omnichannel strategy. Faster, reliable delivery, that's a huge competitive advantage today. It shows they're investing in the backbone to make all these new initiatives work smoothly.
Okay, looking ahead to Q3 then, Best Buy expects comp sales growth, similar to Q2's 1.6%. They're seeing strong momentum from back to school.
Suggests continued strength in computing, gaming, mobile, carrying them forward.
But they're building in that anticipated October slowdown we talked about, with people waiting for holiday deals.
Indeed. It's a pragmatic outlook. Balances the current momentum with known consumer behaviors. They're managing expectations, navigating these cycles strategically. The Q2 beat provides a strong foundation, but the full-year outlook really emphasizes that prudent approach.
So this deep dive really reveals a company navigating some complex waters with strategic innovation and strong partnerships. They're not just selling boxes anymore. It's experiences, solutions, trying to stay ahead of how you interact with tech.
It's a testament to adaptation, really. Leveraging unique assets in a rapidly evolving retail landscape. Their focus on service, experiential retail, those strategic alliances. It suggests a deep understanding of what makes a physical presence valuable today.
So Best Buy's Q2 tells us that even in a tough market, targeted innovation and smart adaptation can drive growth. But the real story here is that tightrope walk, isn't it? Celebrating a win while bracing for headwinds like tariffs.
And figuring out how to best leverage physical stores and integrated services in an increasingly digital world.
Yeah, it's a fascinating blueprint for modern retail.
Indeed. And this deep dive into Best Buy's performance, it really leaves us with a compelling question, maybe for you, the listener, to think about. As tech keeps evolving so rapidly, what role will that physical retail experience play? Helping us understand, adopt, integrate complex innovations. Is the expert advice, the hands-on demo, the immediate service, is that the ultimate differentiator in a sea of online choices? Or are we just seeing a temporary resurgence, something to mull over as we all navigate this changing tech landscape?